Hello, guys. Hello, fam. Hello, traders. Very good afternoon, or maybe still morning. Welcome to another session here in XM Live Education. This is the Beginner's Room. My name is Stanislav Kolev, and welcome to the series of Indicators Masterclass every Monday at this time only in XM Live Education. And in this following 1 hour, we will be covering other different indicators that we could use to have an edge or optimize our trading strategy and style as well. Also, I want to welcome everybody that is watching us outside of XM Live Education, and this is what we'll be doing accordingly and in the following time being. Also, everybody, please be welcome to ask your questions, trade setups, ideas, just anything you guys are interested in. Let's have, as always, this session as an open discussion. Anything that is outside of what I'm explaining or just anything you are interested in, bring it on. And let's summarize what will be happening in the following week. We got significant impact of macro reports incoming, plus additional the most important stocks reporting earnings. We got Microsoft, AMD, Alphabet, Apple, Amazon, Meta. Um, we could add to this Altria, ExxonMobil, Chevron as well, um, Mastercard too. So all of those will be creating volatility mostly on the S&P 500 and accordingly with everything else. Now, despite this, we're having the most important event probably of the month, and we're sealing the end of the month with it, and this is the Fed meeting. We're having it on Wednesday. I'm actually not having a session then, but I somehow believe that we are going to get some disappointment from the Fed meeting. Long story short, my expectations are pointing in the direction where Federal Reserve, the market have been pricing it Fed cutting rates too aggressively, and I don't think that Fed will do it. And I somehow believe that the market will get disappointed on this current meeting. Of course, this is just expectations. And tomorrow on my entry exit strategies, we're gonna create the cheat sheet for this. I see a couple of legends have been here on the chat. Jabulile, Black, Danushka, and Baurach, etc. Tebogo also have been in the previous one. Let me know, guys, what are you up to? And of course, everybody else that's watching, say hi. And people that are outside of um, our stream, I could also follow up on you guys because I have a way to see your chats too. So just say hi and what are you up to? So Fed meeting is the top event that I'll be following. And since that's very much related to the stock market, I think it's a good time for us to dive into the indicator, since we're having an indicators masterclass, dive into the indicator that I have prepared for you. And this is called Bullish Percent Index. Unfortunately, this indicator is not available or MT4 and 5. It is outside of it. But before we get to analyze it, let me quickly explain what this is all about and how we could implement some use of it. Um, so basically, the S&P Bullish Percent Index is used to measure the breadth of the S&P 500. Therefore, it is telling you what percentage of the 500 stocks in the S&P 500 are in an uptrend and what percentage are in a downtrend. This is also famous and known as the so-called participation rate. It is simply because you're seeing the number of stocks that are participating in the upside and the number of stocks that are participating in the downside. Now, the ticker is BPSPX, and the bullish percent index number will tell you the exact what percentage of the stocks are in an uptrend, but without the actual chart, I say that it may not be very efficient. And you know very well that the Magnificent Seven, or the seven, we could even say six because Tesla is not really one, but the Magnificent Seven are the ones that have been recently controlling the direction of the S&P 500, both up and downside. Uh, those are having so huge impact of the index that everything else have become irrelevant. But it's time for them to sell off a little bit. Maybe not, or yes. So you could see here down below, you see the S&P chart, and the upside, you see the bullish percent um, index. So the threshold is 50, as you could see here. And on the 50, reading about 50 means that more than half of the stocks of the S&P are on an uptrend, and the market could be considered strong, and vice versa. And the index is below 50%, it means that the less of half of stocks are in an uptrend and the market is weak. It's also not enough just look at the index. And as I said, you also have to pay attention with the actual chart because you could see huge discrepancy. And I'll give you example with what recently have happened. We have seen this bullish percent index declining, and it was declining from, yeah, we could say from the beginning of the month. But if we open the S&P 500 chart and we put the monthly chart, and from the beginning of the month, this S&P have actually gone significantly up. Now, what is this telling me? It's telling me that I have to find another different reading that is going to be more efficient than this. I have the answer, but let's continue first of all with dissecting this. Um, what I also have in mind is for us to go back test of the amount of times that this goes above 75 or to 75 or even to 70, and see as soon as it dips down below 70 if we're seeing a stock market reaction on this. On the other hand, we could also use it to trade it on the upside too. I also believe that it will be even more efficient. The problem is that you will not be getting too many signals here. That's the biggest problem, that you will not be getting significant amount of signals on the upside, because if you have like 60 or 70% of the stocks going down, something is not really good. All right. But still, we're going to test it this way, the reversal way. So let's see the start. Um, January, February, March, April, May. So let's see the bullish percent index, let's say from 2022. Bullish percent index goes above 70 and dips below 70 in the beginning of January of 2022. So let's open this and let's get back to January of 2022. And this is exactly what happens. This is where a technical signal is. You could argue we have an upthrust here, and then you have a and then you have a breakout to the downside, and then the S&P S&P start rapidly going down. Now I'm going to count this as a profitable signal because it actually have triggered significant profit, whether you traded just this or you traded the breakout. In both cases, that was looking like a beneficial point, really. Now, everybody that's watching, if you see if I'm going too fast or too slow and maybe you have missed something or I didn't explain well, please interrupt me and tell me to start over. Um, and yeah, and if vice versa, if you understand, just give me thumbs up so I could move on faster as well. There is no problem with this, so just be absolutely sharp with that. We're getting back to the index. So this is already in the past, right? Now we had a move down and we had a move below 35 and above 35 again. So we're gonna use 70, 70, and we're going to use 30 as those levels. So um, 70 and breaking below for a sell, and 30 and breaking above for a buy. So the moment that we get to 35, actually, this is the zone. We break below and go up, and this is happening middle of February, end of March. So let's check this. February, March. This is where the chart is. And actually, we have a nice climactic move plus a nice move up afterwards. So I also am inclined to consider this as a good signal on the upside. You got this false breakout. You know, if you're following my other sessions, I'm a huge fan of Wyckoff methodology. And this is exactly what happens here. You got this false breakout, and um, it's clearly projecting and producing a move on the upside. Now let's go and let's move on the next signal. We're having the next signal. Oh, it's again on the up side. And this is the beginning of April, January, February, March, April. So this goes up, and as soon as it drops below 70 is where a sell happens. Let's see. March, April. So can we consider this as the sell signal? I say yes. So far here, we got 3 consecutive profitable signals. And look at this one. This one is severely declining down. And the first to speak in the chat this afternoon is my man. It's Black. Thank you so much for tuning in, Black. And you're asking about gold? Absolutely. Let's go. I was having an early signal with Andrew, an early signal right at this structure, but I have not anticipated. I have absolutely no excuse for this. So this signal, a rejection from the structure, plus climactic move, and A-shape reversal, and it looking bearish. How it seems like we're still in a bearish trend, and I look like this. We got to move down, impulse down, and we already have gotten one level broken, which is this one. And you had some form of, let's call it ascending triangle, where I don't like it too much um, in the direction of the bearish trend. But you have one, two, two, three, three, and you got a breakdown below. And you have an impulse here, and the market has still been correctively going up. So can the structure be like this? Oh, this looks way more like a symmetrical triangle instead. So long story short, something's going on with my chair. Um, huh. You already have gotten a breakout, and now the market has somehow correctively going on the upside. Could we spot this? Yeah, you could say we even got a false breakout. And now the strategy will be to anticipate downward leg, distribution, and another leg down.